Imagine this, a strategy so precise yet so simple it turns the chaotic moves of the futures market into calculated profits, all within the first hour of the trading day. I learned this strategy a decade ago, and after years of testing and refining, it finally clicked. I finally started seeing my losses becoming smaller and my gains becoming bigger. This isn't some get-rich-quick scheme or some wild speculation. It's a proven strategy backed by 2 years of solid backtesting, designed to extract profits from the fast-paced market with laser accuracy. Today I will share with you the exact steps and exact details of this strategy. So if you ever ask yourself, where should I enter, where should I exit, how should I manage my risk, this video is going to provide you with all the answers and actionable steps. And it's not only about finding the right entries, it's about consistency, being in control, and maximizing your potential. You will learn how to find trades within the first hour of the trading day, boosting your performance without overcomplicating your setup. So whether you're a seasoned trader or a newbie, I'm sure this video is going to provide you with tons of value. Let's get started. This strategy worked for me extremely well, and I'm convinced it is going to work for you the exact same way if you follow the 3 steps that I'm going to share with you throughout this video. You can trade that strategy on any instrument, but I personally prefer to stick with the ES or NQ Nasdaq futures. The reason for that, the Nasdaq has been extremely bullish over the past decades, and based on history, my edge is on the long side. This is why I'm going to share with you an example based on the Nasdaq NQ futures, and also the backtested results over the past 2 years are based on that instrument. And also, this is my favorite instrument to trade because I love technology. So that right here is the daily chart of the Nasdaq futures, the Nasdaq index. So what we want to do, we want to mark the low of the day and the high of the day on the daily chart. So even though we're going to day trade, we want to mark these zones because these are the zones that are going to answer most of our questions, whether we should buy, whether we should sell, or whether we should hold on to a position. And if you look back on the chart, these zones are very important levels. Even back here, as you can see, the market tested the lows many times. Here, same thing again, tested the highest many times before it eventually broke out. And if you look back in the history, you will notice that the market spends most of the time in ranges rather than in a straight upward or downward moves. Now, once you mark the day and the high of the previous day, we're going to switch to the 1-minute chart. Now, for this strategy, you can also use the 5-minute chart, the 15-minute chart, whatever fits your style best. I personally prefer to use the 1-minute chart. And you see here as well how many times this zone has been tested. Quite 1, 2, 3 times actually. Here, same thing, 1, 2, 3, 4 times. So these are very important levels that have been tested already a few times. And what we're looking for at the open, at the very first hour when the market opens, we're looking if the price is going to touch one of these zones. Normally, the market is going to open towards the mid of the range, and this is where we don't want to be placing our orders because our probability for success is 50-50. On the upper part of the range and lower part of the range, low and high of the daily chart, is where the most institutional traders are placing buy and sell orders. And we want to position ourselves in their direction and go and flow with them, with the big money. This is why we're going to be looking when the market opens, is the market going to test the lower part of the range? Typically, at the low of the day, we will have a bunch of buy orders preventing the price to keep going lower. And the reason we want to place our buy order around this zone is because we want to go with the big institutional traders. And we want to place our sell orders around this zone because guess what? This is where most institutional traders are going to be placing their sell orders. And this is, by the way, also the reason why buying breakouts isn't working. Because if you try to buy the first breakout, for example, you will see a bunch of sell orders trying to press the price to go lower. And unfortunately, you're going to get stopped out because here are big sell orders around this zone, and it's going to take quite some time to get rid of these sellers that are laying around this zone. This is why normally the breakout happen after a few tests. Once all these sell orders are being taken out and executed, and then eventually you're going to get a breakout. But it doesn't happen the first time. This is why, again, if you buy at the top, you are most likely going to get caught into some kind of a choppiness and a sell-off. So step number 2, as soon as the market opens, we are looking if the market is going to test this low, and we are going to be looking for confirmation. Personally, I like to see one green candlestick on the 1-minute chart, and the second green candlestick must go above the high of that green candlestick. This is my confirmation, and this is where I'm going to place my stop loss, just underneath this candlestick. This way, this here, the red one is your minimal risk, and the green one is your potential reward. So you want to be targeting the highs of this range. You enter at the lower price at the range and close at the upper part of the range. You don't want to be entering in the middle because you do not have an edge and you don't know if the market is going to go up or down. And the problem is that if you open here, your risk becomes much higher and your reward is much smaller. Now I'm going to hit the replay button so that we see what happens right at the open and if we're going to get executed. Okay, the market opens here. A lot of new traders will jump in here and on the long side in the middle of the range. And next thing you know, you see these big red candles. Also, most traders are going to get totally scared of this red, and a lot of traders might even start shorting. This is nothing to panic here. All it does is going for a test of the lower part of the range, and this is why we're looking at this zone to see if there are going to be enough buyers to step in. As we see, the market keeps pushing lower and lower, and it's reaching almost our zone. There is our first green candle and the second one. So right now the entry is going to be right above this candlestick, and for our example I want to place it here to show you how that exactly looks like. The stop loss can be placed slightly underneath and take profit can be placed at the upper part of the range or at the previous resistance. Because this here is a few red candlesticks in a row and a very impulsive move, I expect to see the same exact impulsive move to the upside. This is why I'm going to place my take profit towards this zone, which is the upper part of the range and the resistance. Now you can either place your take profit or trail your stop. Because I want to take my profits faster and move on with my day, in this example I'm going to place the take profit here, but I am also going to show you how to trail the stop in case you want to take more of this trade. But for day trade, this is for me plenty. I'm happy with it and I want to move on with my day. Now I'm going to hit again the replay button so that we see what happens. As we can see here, the market confirms, it goes right above this green candlestick, which is right our entry, and it keeps pushing higher. You see a little bit of red here, but so far there is plenty of momentum to the upside. Now, if you want to get quickly out of the risk, what you can do is as soon as it goes 1 hour in your favor, you can move the stop loss to break even. This way you would be quickly out of the risk and you don't have to worry too much what is going to happen next. And because it is a very fast strategy, I definitely recommend, and I do that as well, just moving the stop loss quickly to break even so that you're out of the risk. Now, as you can see, the market reverses exactly here at this zone. This is not a coincidence. This is basically how it works right at the resistance zone. It's a pivot point and it starts reversing. Now, again, if you wanted to trail the stop and take bigger chunk of this swing and swing swing trade or bigger move, what you can do is put your stop loss right here at the low of this 1 minute trend. And as soon as it starts breaking out and keep pushing higher and higher, you can move your stop loss slowly at the next low of this trend on the 1 minute chart. Now I'm going to speed that up so that we see what happens. It broke one more time again. So if you're using the trailing stop that I just showed you, now you can move your stop loss towards this low because it already broke out, and depending on how much you want to take, you can either take your profits or wait if it's going to do something like that and move your stop loss towards the next low. So these are the rules of the strategy. You wait for the market to hit this pivotal point, you wait for confirmation, you put your take profit around the next possible resistance zone if you want to be done quickly for the day, or you trail your stop. Now I'm going to share with you the back-tested results for this strategy for the past 2 years. These here are the back-tested results for 2023 and 2024 for the NQ futures. And some of you that are already trading for a while, you will notice that this win rate is extremely good, 63.5 and 64.3%. This is a very good win rate, and especially in combination with this profit factor of almost 2, this is a very, very good strategy. Everything in general that is above 60% is really good, and especially if you can make 2 times on your money. You also see here the max drawdown for 5.8% for 2023 and 6.1% for 2024. Now, some of you might ask yourself, how am I actually backtesting? I use TradingView and I use the code, the Pine Code editor there, and I'm putting the conditions the way I want to test. And of course, it has some limitations as well. So this means in this particular example, I couldn't test the trailing stop the way I show it to you. All I did is put 2 different tests. The one test was with 2R and 3R take profit, and the results that I got out of it are pretty similar. So if you want to start backtesting, I highly suggest to start with something very simple and optimize step by step your backtest strategy. And also, to be fair, 2023 and 2024 are very bullish years, have been very bullish. So the situation would look completely differently probably if you tested 2022, because this was one of the most volatile and bearish years. But in this case, it would make sense to actually go ahead and short the high and the top of the candlestick instead of just focusing on longs. So these are the different variations that you can do with your strategy, and it always depends on the current sentiment, who is in control, buyers or sellers. So just having a back-tested strategy is not really going to help you if you do not understand the market psychology and who is in control and how everything works in terms of emotions of the market participants. So this is even more important than just a back test. So thank you so much for watching. And by the way, if you have not subscribed for our free gains guide that we send each Sunday, I highly recommend to check that out because it's totally free, and we send each Sunday 2 growth stocks with deep fundamental analysis and preparation for the upcoming week. I'm looking forward to see you back here on our channel again. Bye for now.